Today I'm going to reveal exactly what I'm invested in. And I'm going to be real here. This is a very difficult situation that I've been contemplating for a while now. There are many pros and cons about being this transparent with my portfolio. But here's where I landed. I made this channel to help as many people as possible find their path to financial freedom. And I walked away from a very good six-figure job that had no drama, and I actually enjoyed it because this was the greater burning passion for me. Ultimately, me sharing my specific strategies and moves will allow us to grow on this journey together. So many people on YouTube talk about what you should do in theory, but they lack the conviction or experience to do it in their own portfolios. If sharing my portfolio is going to help more people, then it's worth it 100 times over, regardless of what anyone thinks. I have no desire for a weird internet flex. I'm simply here to help you grow your portfolio, and I will be here for years to come. If you're new to the channel, welcome. My name is Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please Hulk smash that like button and drop me a comment below if anything comes to mind. Let's grow. Why am I doing this anyway? I think a lot of it stems from the fact that I got off to a terrible start with my own personal finances. I made countless mistakes early on in my journey, and I started way behind the 8 ball. I began to turn things around when I was 28 years old, and I finally got my first real career job, paying more than minimum wage. With reflection, I realized later on that a lot of my past damage was self-inflicted. It also hit me that I now had a master's degree in accounting, and I virtually learned nothing about personal finance in my schooling. So ultimately, I made this channel to help you learn from my failures and my successes. I'll be evolving in real time as the years go by, and I thought it was worth sharing this journey with other like-minded people. Investment overview. I use Seeking Alpha to aggregate my investments, and I should say our investments. My wife and I have both had solid jobs for the past 13 years. Correction, we both had solid jobs the past 13 years until yours truly walked away from his to start this YouTube channel. Now she stands in that category alone. Our investments are held in 5 primary places. The majority of our portfolio is in E-Trade. My wife's 401k and HSA is with Boeing. And then we have some crypto that we'll discuss here in a bit. I have an account at M1 Finance where I hold our individual stocks. And then we have a checking and other category where we have miscellaneous cash. Let's look at the holdings in one account at a time, and then I'll show you the spreadsheet that I use to bring everything together so I'm aware of my overall allocations and I can make future investment decisions as I have new money to put into the market. I rolled my traditional 401ks from 3 previous jobs into E-Trade via a rollover IRA. That's all pre-tax dollars. And I also have a very small Roth IRA from Boeing as well. When my wife and I were both working, we would have extra money to invest each month, and that would go into a taxable account within E-Trade. We lost over half of our income when I walked away from my job to start this YouTube channel. So now instead of investing extra into the taxable account, we actually take the dividends from that account to help us pay the bills temporarily. And you're going to notice that within my E-Trade, most of my dividend producing holdings are in the taxable account and the growth holdings are in the IRAs. And there's a couple reasons for this. For starters, we actually need the money right now to pay in our bills a little bit. But even before that, I would have a nice mix because I'm okay with the forced taxable event with qualified dividends from things like SCHD being taxed at 15%. And I want a lot of the growth accumulating over time in the IRAs. There's pros and cons both ways. I'm not gonna get too deep into taxes on this video. We'll probably discuss that later on as I share my strategies and moves, but I just wanted to give a shout out. I am aware that a lot of the dividend producing assets, even non-qualified dividends like JEPQ and my money market, are in my taxable account, and there is a good reason for that. All right, let's hop over to my screen and take a look at the E-Trade account. Okay, we're out here on E-Trade, and as you can see here, I have a variety of positions. We are looking at all of my accounts together. I'm not gonna click this just so I don't have to hide the account numbers, but this has my taxable account, which is about 400,000, and then the rest is mostly traditional IRA and a touch of Roth IRA, 7 or 8,000 total. And these bottom 3 accounts are my nephew's. It's a custodial account, so this is not my stuff, and I'll show you how I account for that in Seeking Alpha here soon. So as you can see here, VGT, my average cost is 287 and I have 650 shares at 328,000 total. And with SCHD, and with both of these, I've actually moved some stuff around in the last few years. My true actual cost is lower on both of these, but that's okay, especially SCHD. I just did some major shifting because I needed a little cash flow, and I won't go into all that, but VGT is 100% in IRAs. SCHD is about 50-50. And then VMFXX and JEPQ are both in my taxable account, giving me well-needed cash flow right now. So with JEPQ, I have 1,632 shares for 84,000. My money market VMFXX, which currently pays about 5.3% net of fees. This basically replaces a high yield savings account for me. It's given me better rates than most high yield savings over the last year or so. I have 124,000 in there. I like to keep about 10% of my overall portfolio in this, and we'll touch on that later. And yeah, SCHD, I have 4,095 shares at 72.35 per share. And that's worth a total of 315,000. So that's E-Trade. 401k and HSA. My wife's 401k and HSA plan with her employer are currently the only holdings we're actively investing into as we reestablish our footing with my big recent move. We plan to max out her 401k contributions and her family limit of 8,300 in the HSA in 2024. And again, that's a steep amount to put in, and that's why we're actually extracting some of our dividends from our taxable account to allow us to continue investing. And I'm gonna show you her stuff on Seeking Alpha. Every other week, she updates her numbers after her paycheck clears, and I just plug them into Seeking Alpha because I don't wanna bother with logging in, and it's really annoying and a little bit clunky. So we track that on Seeking Alpha. Let's check it out. So we're out on Seeking Alpha where I track everything, and here's the section that we're looking at now, 401k and HSA. But real quick, so the E-Trade that we took a look at earlier, I track everything here. So here's the same holdings, the 650 VGT, the SCHD, everything right here will match what you just saw on E-Trade. I include the little bit of cash on my account here so it won't match perfectly. It just grabs everything. But these here will add up to exactly what my value in E-Trade is, getting rid of my nephew's stuff. So this is where I analyze my portfolio 99% of the time. I only log into E-Trade to make transactions. And now for this section, here's the wife's 401k and HSA. So this one here is what I always talk about in my videos as VOO, V-O-O, the S&P 500. The Boeing version of that is actually this index fund, but it's the same difference. And that's why you'll notice in E-Trade, I didn't buy any VOO, because we'll look at the spreadsheet later how everything balances out. But since my wife has $315,000 of an S&P 500, that is about matching my other big funds in E-Trade. So it keeps them at about their third each, and we have to tweak them every once in a while. And then this VIGIX, this is basically the equivalent of VUG, the ETF. It's a growth fund, it's solid, it's not the best, but it is the best option within her HSA fund. We have $23,000 worth of this, and this is the HSA. So these ones we're cost averaging into every time she's paid, and I don't control the amount. I work on manually balancing everything else to ultimately keep the overall portfolio in balance. Crypto. Unfortunately, I got into the Bitcoin craze a little bit late. I refused to blindly hop in until I read a few books and many articles on the topic. Frankly, I'm still skeptical of Bitcoin, but I figured a little percentage, a couple percent of my portfolio wouldn't be too devastating if it went poof, and you never know, maybe it will go to the moon like everyone thinks. So I just plan to hodl what I have for the foreseeable future. I started to cost average into Bitcoin aggressively in January of 2021, and unfortunately that timing wasn't great. Let's check out the damage. All right, we're hopping over to crypto, and I'm not going to show you where I actually hold my crypto, so you'll have to take my word for it a little bit on this one, just for security reasons. But I do have my exact shares in here, and as you can see, I'm upside down on crypto quite a bit. It's down 16% lifetime. It's worth 31,000. Let's check it out. I'm a little embarrassed to admit I'm part of the Doge army. I jumped on that train, obviously late at 39 cents per share, and it's worth 8 cents per share. Now, it was only just over $1,000. Relax, everyone. But I am down 80%. Whoopsie. And on my Bitcoin, my real crypto holding, I'm at 31,000 value. My average cost is 46,000 per coin. Didn't time that one great either. And I have about 0.78 Bitcoin. Long term, I might get myself 1 Bitcoin. We'll see. And it was actually green overall recently. This was just over 46, so it's down in the last week or so, but I'm just gonna hodl this stuff for a long time and see what happens. M1 Finance. This is my most exciting and fun to manage account by far and away. I hold all of my individual stocks in M1 Finance. My best friend and I started an ETF that we call the HODL Factory in April of 2023. We run a stock screener in Seeking Alpha, and then we apply some spreadsheet logic that ranks and scores each of the companies. Our goal from the beginning has been to beat the market over an extended period of time. And we meet once a quarter to day drink. to rebalance our fund. I'm planning on having the HODL Factory plus crypto be 10% of my overall portfolio long term. Unfortunately, I haven't been able to add a lot to the HODL Factory because of my new situation, but all of our extra new dollars, once I figure something out and start producing a little bit of income, will go into these stocks until it's about 10%. Let's HODL over to my screen. All right, here is the HODL Factory. You can see the value is just under $6,000. Our total growth in just under a year is $1,000, so it's performed pretty well. And when you look down here at the total performance, you'll notice these numbers look weird because this is a weighted money average. I recently took the market to only being 1% overall instead of the 10 that it was. So the numbers look funky, but the weighted return is correct since we started. And the market has been up 20.5% since last April when we started. The HODL Factory, our individual picks are up 32%, so not too shabby. If you look at year to date, we are falling a little short. So far, about 3 weeks in. We got some work to do here. I'll give you a quick look at our current holdings. Our rules will have us only having up to 50 companies total, and I'm not gonna read all these, you guys. They're sorted by total value right now. You can see Broadcom's our #1 holding. So we have 4% allocated at most to these guys based on our spreadsheet logic. And I'll just slowly scroll down if you are interested in looking. I'm not gonna announce all these companies for now. Later, I'll show our methodology and how we do what we do. It's pretty fun, but that's not for this video. As you can see, we have a bunch of 3% holdings. You keep scrolling down and then you drop to a bunch of 1%ers. So I'll scroll down to the bottom here just to give you the full spectrum. I think we currently have 42 holdings. Checking and other. This one is straightforward. We have a buffer in our personal and business checking to pay off our credit card each week. And we also have some miscellaneous cash as well. For the most part, my wife and I buy everything on credit cards just for the points and the rewards, and then we pay it off on a weekly basis, so it never ticks interest. Spreadsheets. I plan on making some cool portfolio tracking spreadsheets that I can share via YouTube memberships or maybe a Patreon in the future. That was sort of my thing in my working career. I was pretty savvy with Excel, so I want to put some cool stuff out there. But for now, I'm working on just getting my uploads going and getting into this thing. But I want to shout out Aaron, who joined my YouTube memberships just to support. I don't have a battle plan yet. I technically opened it when monetization became available. I just want to give him a huge shout out as my one and only member right now. Let's hop over to my screen and take a look at some very basic spreadsheets that I use to balance my allocations. All right, we're going to be brief on the spreadsheet today. I do have a lot of modules for dividends paid and some other things that I use and some different projections, but I'm gonna show you the short and sweet version that I do each week just because we're at a little bit of a time constraint here. What I do is every week I put just the value of what each holding is worth. And this is directly from Seeking Alpha. So you'll notice this number right here matches. It'll be a little off because crypto's ever changing and I just updated it before I did this. Or for the most part, it's usually within $3 because I don't put decimals. I just put in like a whole dollar amount. I round everything down. And so that way I get my total portfolio value here. And then at that point, I manage my allocations with this simple pivot table that's right off that other one. So you see VGT is currently 26%, VU is 25, and SCHD is 25. And I try to keep these the same. You know, VGT's been growing, so of course it's gonna get out of balance here and there. When I cost average in, I make sure that I keep them all proportional. And I know that VU, which technically is that other ticker, this is just how I track it on this spreadsheet. This is my wife's 401k, but on this one, I know that I won't be able to control it. This might eventually get to 32% when these ones are at 25 or 24. But what I can control right now, until we get the income flowing again, is VGT being roughly the same as SCHD. And then my cash, I usually like at least 10% overall. This includes the checking and all that stuff, plus the cash you saw in E-Trade. JEPQ is for cash flow right now. I don't consider it my long-term investments, these three, but I do like the high yield right now, and I've enjoyed it and had good luck with it so far. And then crypto and stocks. So I eventually want these, they're currently only at 3%. I eventually want these at 10%, as I mentioned earlier, and that'll be the vast majority in stocks is the HODL factory, and crypto will be, you know, anywhere from 2 to 4%. And then VIGIX is just sort of the random one from the HSA that I don't put into my allocations because it just is the best option there, and we roll with it. That's it. That's the simple system that we've used to get our portfolio over $1 million over the years. Let's quickly hop over to another spreadsheet that shows just how important that beating the market each and every year just by a little bit has added up over time. Okay, so in this spreadsheet, I put in my rate of return over the last 10 years. Now keep in mind, it was a good decade. These numbers will change, but my 3-fund portfolio returned 14.5%. And frankly, I was a little higher because I admit that I was pretty heavy in VGT, dumb luck, the first few years, but I've slowly balanced out towards the end of 21, early 22 to have SCHD just in time for the down year in 2022. That was not skill, that was luck. But if I had been my third of each of VGT, SCHD, and VU, it's up 14.5% in the last decade total return. And if you just do a scenario where say someone had 100K like from their 401k or just like to start, and they were putting in 1,000 a month, in 13 years, that would have been 1.1 million getting, you know, about what I have right now. The market has been up 11.99%, we'll just put 12 in that time, from 1.1 million to 844K. That's only 2.5%, but the compound effect adds up. It's kind of like those financial advisor fees, only the good version of that, the opposite, the positive compound. But it's really important to get a solid portfolio set up and just stay the course. And I have one last word about staying the course that I'm gonna show right now. Investing has its highs and its lows. And I like to take a weekly snapshot in this tracker just to see where we're at. And my wife and I hit over $1 million for the first time ever on 4/1/22. And boy, did that feel good. And we were putting in, you know, $7,000 or $8,000 a month, counting 401ks, HSAs, company matches, and my money at the time going in as well. And look what happened as we continued to pile money into the market. Each and every week we went down and down some more and down some more until eventually we found ourselves way later at 850,000. Ouch. But we never sold, and we still haven't sold. We're basically shopping in the bargain bin by default as we stick to our allocations at that point. And sure enough, over time, the shares have built and we finally hit another high here about a year later. And then as you keep going, you know, the market will go up and down, but we hit some more highs here and it just is gonna be all over the map. That's the nature of something like VGT being in your portfolio, and even VU. But as you can see, as everyone knows, we've all been hitting highs. I'm sure you have as well if you're watching this the last many weeks, and we're just going up, up, up right now. And I wish that it went down a little before sharing all this because it's inevitably going to happen. It'll go up and down and up and down, but if you cost average in and stay the course, over time it will go up. I'm glad I was able to get this video off my chest, you guys. I have a lot of future video ideas about my strategies and holdings and dividends received and all kinds of stuff that require me sharing this. I look forward to going on this journey together over the next many years. May we all reach our version of financial freedom. And since you're still with me, check out one of these 2 videos if you'd like to learn some more about this stuff. Thank you for watching, and I will see you here every Thursday and normally on Sundays.